Why are homeowners selling low and buying high? There are home sellers happening all the time. People with amazing interest rates selling their home to buy a new home at a higher interest rate. At first, it doesn't make a ton of sense, but it's happening every single day. Now, it's not everybody. The higher rates have put a damper on things, but it's not stopped everyone. So why are these people getting rid of some of the cheapest mortgages ever to buy a rate that are literally double what they're currently paying? Now, it's not everybody. The higher rates have put a damper on things, but it's not stopped everyone. So why are these people getting rid of some of the cheapest mortgages ever to buy at rates that are literally double what they're currently paying? Well, lots of reasons, as it turns out. Just a few examples we've recently seen. Some retiree parents who, during their summer vacation visiting the grandkids, took out a $500,000 cash out so during their 3 weeks of vacation time they could find a second home to be closer to their children and grandchildren. Now, whether they move out of their current home permanently and sell that home or not is still up in the air. Or a software engineer who, after transitioning to fully remote work, decides to sell their current home in a high cost of living area and move to a more suburban area and take advantage of the lower cost of living with their high salary job. Or somebody who found an opportunity in the recent job market and was able to secure a significant salary bump by changing employers, but the change requires a change of location. Or empty nesters who choose to sell their larger home and downsize, taking advantage of the really high equity and appreciation that they've experienced these past several years. Or those same parents maybe seeing the current market and giving their child a huge gift of a down payment from some of the equity in their current home. These are all scenarios and they're happening right now, and only a few of the examples from our small office. As mortgage professionals, we're staring at rates every single day, and it's impacting us in a big way. But we have to remember this simple yet often overlooked fact. People want houses, not low-rate mortgages. And as an LO who recognizes this, we can continue to do deals in the current market, understanding the borrower's current circumstances and helping them find the right financial tools to solve for what they need. For many today, that means a 5-1 arm. For others, it's just understanding that if rates drop, they can refinance. If they go up, you'll be happy that you got a rate at the lower rate because, make no mistake, rates are still low by historic standards. And as an originator, it's our job to find and help people. But as managers and as executives working for loan origination teams, it's our job to find and help our originators. And right now they need help. It's obviously a difficult time to be in their shoes. And for some, they just need a little bit of hope or help capturing an extra deal or two each month. The transactions are happening, they just are harder to find than they were. It's impossible to predict when things like this market shift will occur. But many of the larger lenders knew that the market would eventually shift away from refis. And they prepared, and today they are demonstrating that preparation in investments in building better and more efficient systems and teams. While others are really scrambling, they're cutting costs and trying to get a handle on things in general. The leadership and example you provide to your teams can tell them a lot about whether they are at the right place doing the right things or not. That very leadership can determine whether those originators will stay or go, whether someone will be joining your team or joining competitors. What originators need most right now is simple. They need more opportunities, more at-bats, more chances at a deal. And we've been saying it for over a year now. Refocusing on the core business of partner relationships is key, and the past 12 months have only made that more and more clear. One key strategy for lenders: building, strengthening, and acquiring new partner relationships is all about controlling the transactions. Becoming a source of business to your partners rather than just being a service provider. If you can not only provide excellent service, but also step in as a provider of home buyers and home sellers and to your partners, your ability to get and retain partner relationships is significantly improved. But how do you control the transactions, or how do you become a source of business for your partners? Well, you refer them first-time buyers, home sellers, and home buyer leads. It's not about being the source of all of their business, but by providing them a home buyer here or a home seller there, you open up reciprocation in a significant way. One of the most cost-effective and simple ways to find home buyers and home sellers is to monitor existing databases. Whether it's your own clients or leads or contacts, or it's your referral partners, you can find who is about to sell or buy before anyone else. Capturing these opportunities and then referring them to your partners is a recipe for success today. To learn more about how MonitorBase is helping lenders monitor these databases to systematically find and capture home buyers and home sellers, click the link to set up a time to speak with one of our business development representatives today.